Hello, and welcome to the first of Tricera's workshop series, where we give you practical advice on how to approach your sustainability reporting journey. My name's Amy. I am Head of Product at Tricera, and today we'll be covering the topic of the CSRD and any irreversible reporting mistakes that we want you to avoid in 2025 and beyond. I am our Head of Product at Tricera. I lead our platform development, and Tricera is an AI-powered platform for sustainability data to help you with all of your reporting as well as sustainability decision-making. I have with me today Sophia from Tom Taylor, as well as James Thompson from CFGI, and I will hand it over to each of them to introduce themselves. Sophia, do you want to go first?
Of course, thank you. Thanks for the invitation and thanks for having me. Yes, my name is Sophia Honert. I'm Senior Manager Sustainability and Corporate Responsibility here at Tom Taylor. We are a casual lifestyle brand located in Hamburg with more than 2,500 employees and 30,000 points of sale. And yeah, I'm responsible for the whole sustainability department. And to summarize a bit of where we stand now as Tom Taylor in terms of our sustainability journey. So we launched our B-part strategy in 2020, and since then continuously evolved the strategy. So it's right now one of our fixed fundamentals of our business strategy. And right now we are in the process of finalizing the double materiality assessment, and we are also launching sustainability reports since 2022. So we have quite a few experiences with this, and yeah, are also setting up right now our next CSRD pilot report, and I'm happy to share some insights with you.
Great, and James?
Yeah, thanks very much, Amy. And again, yeah, it's great to be here, and thank you for the opportunity to share my experiences with everybody on this webinar. I'm James Thompson. I'm a managing director at CFGI, which is an ESG finance and accounting advisory firm based out of the US, UK, Germany, and Singapore. I lead our ESG advisory practice and work with a number of large listed and private companies globally to help them with the variety of ESG reporting that they've got to manage. That's everything from the data collection through to double materiality assessments, audit readiness, audit support. And actually specifically for this call, a number of my clients have produced their first CSRD reports or are in the process of doing so. So it's been an interesting and quite an exciting journey to work through the last couple of months as those first reports have gone out.
Awesome. Well, thank you both. I'm excited to have you both on the panel today because, Sophia, it will be wonderful to hear from you from the perspective of actually someone writing the report and dealing with all the data collection struggles within an organization. And then James, from the fact that you've been able to see that across multiple different organizations from an advisory perspective. I think both of your perspectives will lend different tips and advice for the participants in this webinar. So in terms of our agenda, we're going to spend some time going through each of these mistakes and talk through how we can avoid them. Just as a quick on the top summary is mistake number 1 will be not engaging auditors early. Mistake 2 is not establishing the necessary data collection processes and controls. Mistake 3 is underestimating the importance of the qualitative, the narrative sections, because there's quite a few of them. Mistake 4 is the lack of organizational readiness as well as stakeholder buy-in and education. And the last is around using outdated tools. You'll see a poll that popped up, so please feel free to answer that poll whenever you can while you're listening to us. So the first mistake is around not engaging auditors early. Some of these stats here are from the PwC's 2023 Global Investor Survey, but I wanted to really focus on the middle box here, where it says that 85% of investors think that companies' disclosures of ESG metrics and KPIs should be assured at the same level as financial statement audits, which is a pretty crazy statement, right? Going through like financial audit on your accounting data has been around for decades at this point, and there's been so much different changes in the internal audit and external audit to make the data as auditable and transparent as it is today. But it is interesting in the age of greenwashing concerns and false claims that people are concerned about. I think there is an interest in making sure that at least at some level, this ESG data is transparent and is being looked at from a third party's perspective and not just claims made by one company within the team. So the first question I would say is the double materiality process. It's step 1 of CSRD. James, what are some of the risks you've seen in involving the auditors later on in the process for DMA?
I mean, the biggest risk is it's going to delay your reporting at the end of the day. There's a pretty strong correlation between the amount of time it takes you to do an activity as somebody who's producing the information and the amount of time it takes to get audited. And so if it's taking you 6 months to produce a double materiality assessment, don't assume the auditors will turn that around in a week. And very much you want to try and eliminate as much of that sort of last minute type reporting and last minute audit as you can. I think what's important to note is you get a separate opinion for your limited assurance on your sustainability information for CSRD. However, the one place where it can have an impact on your financial audit opinion, which, as sustainability professionals, we wish this weren't the case, but actually that probably is the most important one for many clients. The one place it can impact that opinion is if you end up having to delay your entire reporting because you can't finish your sustainability assurance engagement. So it's really, really critical that you get started early so that as a sustainability professional, sustainability team, you're not the one holding up the entire annual report.
Yeah, that's a great point. Just a quick call out, everyone, if you have questions as James and Sophia are speaking, please feel to add it in the Q&A option at the bottom, and we will answer them as we go, as much as we can. One question, James, that came to my mind as you were talking about this is how long do you see the audits typically take for maybe just the DMA process itself as well as the overall CSRD report?
How long is a piece of string? Let me give you an example of a couple of clients that I've worked with. So one that I worked with, we started engaging with the auditors in June of 2024, and that assurance work started with pre-assurance in quotation marks, and they took a break of a week before they got into the actual public limited assurance exercise, and that's how long it took all the way through to effectively middle to end of March. It took that long. Why? Because that, if I'm honest, we weren't ready for them at the pre-assurance piece. And so actually there's a piece here of not engaging them early enough, sometimes also engaging them too early. When you're, particularly for pre-assurance, if you're working with a set of auditors, the way an audit or an assurance engagement tends to work is they will ask a question about a piece of information, and then they'll ask you a question about your answer or the piece of information you've given to support your piece of information. And again and again. So maybe there's 5 steps in their process. If they get stuck at stage 1 because you haven't got that information available, they're not going to work through stages 2, 3, 4, and 5. So you want to make sure you're far enough along in that actually you can work through the different steps and they're not hanging around really not doing anything. So there's an element of making sure that you've got your house in order, not perfectly, but your house in order before you really get them working through your information.
Makes sense. How about you, Sophia? What has been your process with the DMA been like?
Yeah, I could totally agree with James in terms of that you're running out of time, because from our opinion or our experiences we made here is that we kind of started the DMA process, I think August last year, and we are short before finalizing it. And I don't want to say that we underestimated it, but definitely it took us longer than we thought. And it also took more of our resources, definitely. So I can agree on that. And I think one of the other big risks of not involving auditors at a very early stage is the misalignment of the assurance requirements. So what we found out that it's super helpful to align on the methodology you want to use for the process. and how you're going to set up this whole thing, because also the auditors require like a description of or a guideline of the whole process. And of course, we have a big Excel file besides like calculating or describing all the errors and stuff like that. So I think this alignment on the methodology is super important, because if not, then we are coming back to the problems regarding the time and also maybe the costs, which haven't been mentioned so far. But this could also be a risk that it's getting more costly if you have to do like more and more loops, because you're not aligned or not really aware of what are the auditor's requirements. But yeah, and I think also it's super helpful to involve them at an early stage. We can also be like finding some gaps in the whole process. So they're also functioning a bit not only as an auditor, but also, yeah, as a as somebody who can like give you some tips and tricks, because they have already been involved in all these processes and have seen quite a few DMAs, most probably before yours. So I think this is helpful.
Yeah, we've definitely seen people do that kind of pre-assurance engagement where they're not paying for the full audit process, but then they're meeting with the auditors maybe a few times just to get their sense for what they will be looking for, and then sharing initially what they have just to kind of get an initial reaction from the auditors in terms of how complete or not complete their current process has been. One question from the audience, maybe to James, is, do you see that there's a benefit to using the same auditor for financial reporting with the ESG or DMA data assurance process, given their familiarity with the business, or would you recommend going with a different auditor?
I would recommend going with the same one. And to be honest, that's where the majority of companies have gone and are going. And in some states, in some countries in Europe, it's a requirement. And the reason for that is it's integrated reporting. The idea is it's all this happening at the same timeline. And we've definitely seen in the engagement we've had with auditors, you've got, half the team is part of the financial audit team, is the same on the assurance team, because actually there's a lot of cross communication. So let's take an example of your HR metrics that you'll likely be reporting on. A lot of that information may come from the payroll system. That's how they can get comfortable over those metrics. And that will have already been tested by your financial auditors. So why duplicate that piece of work? Your downside is your financial auditors think this is a nice opportunity for me to increase my fees, and you feel like there's no competition. So I wouldn't say don't go for them just because, do look out there and see if there's somebody else that, that might offer a better value for money, considering those other challenges.
Great. And maybe Sophia, on the second question here, how do you ensure that your ESG reporting cycle aligns with the auditors? Like, what were some of the touch points you had with the auditors in the process?
So we started with the basic kickoff meeting like in August last year. I think this is like one of the things I would mention, like what is important to ensure everything. So contact them like on an early stage and on a regular base, let's say, because this was very helpful for us in the whole process, having like an exchange every now and then, and like not starting the process and in the end providing a final something they have to audit, but to prove it within the process that you are on the right track and not like working kind of totally in the wrong direction. I think that was super helpful for us. And as I mentioned before, for us, it's also to see the auditor not only as a kind of a gatekeeper, but they're also really helpful with their opinion, and they can help you in the whole process and guide you kind of through this. Yeah, even though they're not like a service provider, but nevertheless, they have like a lot of experiences. And as we, for example, also are working with the same auditor as for our financial reporting, I found this also very important, because actually we as a sustainability team, we do not really kind of speak the language of auditors, and it's super helpful having like the finance department on our side who have the contact since ever, and they know how to set up such reports. They speak the same language, and this is also super helpful in the whole process. Yeah,
I think that's that point that you've just made, I think, is one of the most critical ones here in terms of pre-assurance isn't something that's sort of on this screen, but some people ask, should I do pre-assurance? And I would always recommend absolutely you should do.
Mhm.
And even if it's not so you get a bit more comfortable over your numbers, it's so that your teams get comfortable and understand what an assurance engagement is like. For those that have, finance is used to being audited, your HR team probably aren't, your procurement team almost certainly aren't, compliance maybe. It's a very often difficult experience to be audited at the level that you will be expected to be for CSRD, and them getting a bit of a taste of that experience about, oh, I do need to make sure I save that email, and I have thought about why that number doesn't agree to that number and not just accepted it as fine as being different, is really, really important. If you leave that through to the last minute and through to the last point that you can do so, you're going to find a huge number of challenges.
Great. And then one more question before we move on to the next topic is if there's a mandated time frame to respond to audit findings, and are the findings categorized in your experience into like critical, major, minor, observations, recommendations?
I can take that from the formal perspective, the formal limited assurance. So from a formal limited assurance perspective, you will get an assurance opinion, and that assurance opinion will, for the most part, say, this is what the company did, and this is public, by the way. This is what the assurance provider did, and were there any things that they thought materially misstated or materially got wrong, what was presented. They'll probably say a couple of fairly standard sort of what we call variations or qualifications to what they're saying. There was a view that was going to be a lot of those when things first kicked off. I haven't seen as many as I thought I would. So actually people are coming back with quite clean reports, which means actually the reporting has been pretty good and the auditors have generally accepted it. What you don't get in that public opinion is any kind of qualification as to, what errors are there? Are they big errors, small errors, or not? What you'll likely get from your assurance provider is a separate management report, which is something that they will provide that isn't public and will go to your directors, your board, or your audit committee, and that that's likely to be classified into these are the most significant ones, these are not so significant, and these are more minor. And generally what happens is you as the practitioners who've produced the reporting, you'll get the chance to respond to that, and then the kind of, these are the findings, this is management's response, that's what tends to go to the board. As for timings to respond, nothing formal, that's completely up to you. That's your organization's view of the world. If your audit committee says, I want this done by next week, say bad luck, and maybe have a conversation with your audit committee.
Sounds great. All right, let's move on to the next topic here. Data collection processes. There's a lot of quantitative data points that's required, and the traditional way of collecting sustainability data might not work because, again, there needs to be a rigorous process to ensure that you're capturing all of the data across the organization. So the first question for Sophia would be, what are some of the key elements do you think comprise of an effective ESG data collection process for CSRD?
I would definitely answer that. We start with the DMA because our experience is our first CSRD pilot report from last year. So we have done a materiality assessment, but not a double materiality assessment before. And this time we kind of followed the right process, starting with the DMA. And I think as long as this is kind of the heart of the whole reporting and everything, I can really say this, it's a pain to walk through this, definitely, but whenever you have like the results, this makes it also more clear, so what topics are really material for you. And when you know what topics are material, you can better define what kind of data you really need and you are looking for, or you will hopefully have already in place. So I think this is definitely the first thing I would give as a tip to start with the DMA. And the next thing which should be included is, like, I would cluster it as clear responsibilities and clear tasks. So I think it should be defined like what kind of data we need, but also who is responsible for the data. So define like really the responsibilities and the right people, because this was something challenging for us. Because we set it up like mainly from the sustainability department. So we were the responsible ones, like when we just have the narrative sustainability reporting in the last 2 years, and then we try to get closer to CSRD and all the requirements of the ESRS last year, but we figured out that, okay, it's not on us. So we have to talk to a lot more people within our company, and we have to educate them, and we have to teach and train them that they are really like now also responsible for this. And so therefore I would say like, yeah, setting the right responsibilities and define ownership, who owns which data points is super essential as well in this process. And of course, like standardized frameworks, this is something you should align on, and also get the involvement of the C-level and the board is a must, in my opinion.
Sophia, I just sort of building on that a little bit, the standardization one has been something that I found quite interesting and almost very, very challenging for a number of clients. Some of the bigger clients that I work with that often almost franchised or distributed, maybe they've got quite independent operations in different jurisdictions and different countries. It's actually extremely difficult to standardize, because what we've got to remember is CSRD here is a framework for reporting. It's not a framework for how to run a business. And so it's absolutely critical that you start not from the reporting standards, but you start from your business. And you say, what is my business doing? How does my business currently collect information? What does my business currently collect in information? What is the existing reporting structures? The moment you try and work against that, no matter how big or how powerful your sustainability team potentially is, you're not going to stop the business doing what it's already doing. All you can do is try and shift that train in a certain direction. And so what you need to kind of think about is, if you've got a very distributed business where there's a lot of power in your subsidiaries or in your geographies, it may be different in different locations. And then from a central perspective, trying to report, you've effectively got to accept that and then try and work out a way that you can bring those different perspectives together into a single report. And that puts more effort and more work on the group team. But that it's easier to do that than to try and sort of distribute it.
Awesome, thank you.
Or something different. Everybody else.
Yeah, definitely. No, I think it's just for consistency. But as you see, when you start the process, you know that this is quite like, it's super complex and it's multi-complex. And to be honest, this is something, this changes a lot. So I think like the CSRD reporting is like, yeah, it needs a shift in mindset. It's a shift in data. It's basically a shift in the whole thinking of the business. So, and yeah, to face these problems and to face these challenges, yeah, is a challenge to keep everything in place and get all the right people and the right ownership.
It's also really valuable for a business. Really valuable for a business.
Yeah.
So much of what you see, or the teams you'll be talking with, will be. It's about I'm almost making them more mature. You go and look at the data, and you go and try and sort of work the information. You work with what they're already doing, and what you're effectively saying to them is, we need to get this CSRD ready. And that's generally a good thing, because it means there's more rigor in the data that's being communicated. There's more thought into why things are being done the way they're done. There's more structure into the decision making that's happening. There's proper process that goes through. And yes, there's an element of cost associated with that. But you go and talk to a leader within a business, and you say to them, would you like good quality information or bad quality information to inform your decision making? I think there's only one answer there. And so CSRD, yes, it's a reporting requirement, but actually it's built on the basis of what it's trying to do is really help businesses think more effectively about the non-financial elements of their business and use that to help inform their decision making. And that's really what you want to focus on when you're engaging with the various different parts of your business on CSRD. And that's how you and help them improve their data quality, their data information, through process, through controls, through auditability. And that's really where the value is.
True. There's absolutely a lot of value, and I see that as well. But what is super challenging for us internally is that you have to explain the value to all the other people, and so what value it has for them, especially because in the first view it seems like it's just more work, and then it's not as easy to manage. So I always have I feel a sense of fear when we're saying the word, hey, CSRD report, I need some data. They all get more afraid than that they see the value. So I think there's also a lot of our work is to train the people and to make these values and advantages somehow visible. And as I said also in the introduction, so it's really it's a chance to do like a kind of a strategy refresh. So and not only
I've seen that a lot, is
Yeah.
actually you start asking these questions and you maybe get teams that are a bit defensive to begin with, but they do come around to it and realize actually this is really quite useful for me to think about it this way. Maybe there's a better way that I can really make almost get my agenda across. It's now going to get much more focused than it's ever got before, because it's now going to the board for the first time and they are going to read it and they are going to sign off on it publicly. So there's definitely value, or there's ways of communicating the value of CSRD beyond you need to do more. You need to do more, but this is the benefit that you'll see from it.
I think that's a great idea for the next webinar topic in terms of how to convince stakeholders to see the value of ESG data. And I think that's a lot of that comes to us from a lot of different members of our clients where they're like, well, we need budget to do this. And the budget holders don't necessarily see the ROI in it. Like, how can I prove that all of this is worth it from a business perspective too? So that's something we can definitely focus on. We have a number of questions that maybe we can try to quickly knock off before we move to the next topic. First is around methods and tools to collect emissions data from suppliers. Sophia, have you started thinking about this process on your end?
Yeah, definitely. Yes, we have a lot of suppliers we are collecting data from and a lot of different sites in our value chain. So this is definitely a challenge we have and we are facing. So what was our process looking like before? So yeah, actually, as most of the companies, we also had like an Excel sheet used for this. So we call it a scorecard. So this is set up in the same way for every hub we are collecting data from, and this was stored on a SharePoint where everybody can has access and enters his data. So we established like also a data collection process in terms of the timeline. So it needs to be there on a quarterly base, but it was Excel based, like in general, the whole process. And since December or October last year, we luckily work with Tracera, which is definitely a shift in that data collection process, because this makes us possible also to onboard our suppliers and the single point of contacts onto this platform, and they feel even more responsible for their data because they get more responsibility in collecting that and accessing that to a platform, for example. I think this is kind of a game changer as well, because before we were like the ones saying, hey, we need the data, please provide me the data to a certain point. And we had to recheck it, and we have to do like the check whether the data is correct or if it's not correct, and we have to do like all the emission calculation and remind the people. And I think this definitely changed with having a tool in place who can like support us on the one hand and the like project management function. So this takes a lot of work from us as the sustainability team, but also like having a single point of truth somehow. And here again, we come back to the auditing process. I think it's also much more convenient for an auditor in the end to get access to a platform and like see data structured in a certain way, like every year looking the same, and you have the comparability of the data to the last years, than getting, I don't know, a bunch of Excel files and you have to make it somehow through this document. Yeah. But this is something, so this is how we set it up. So we have a responsible person for every data point in every site and a deputy, because I think this is also super important that it's not only on one. And they have now access to, in our case, Tracera, the software, which helps us like with the CSRD reporting, but also with the corporate carbon footprint accounting. So yeah, a game changer.
Awesome. And then one question here, I'm going to actually try to answer the assigning responsibility for data when company-wise different ownership may occur depending on the location and site. Sophia, I'm sure you see this as well, but typically our customers for site-based data like electricity or gas or vehicle fleet usage, they assign the ownership at the individual sites. There's usually a data provider at each of those locations, like a facility manager or an office manager that provides that data. When it comes to HR data, usually we see the ownership more at the entity level. So there's like a business unit HR manager that provides you all the HR data across all of the different locations. So the ownership structure will depend a little bit on the actual data point, but that's how we see the ownership distributed. And then on the DMA question, going back to our favorite topic, there was a question around, when you conduct the DMA, do you have to involve external suppliers? Because that's where it's usually hard to get a hold of people that you can talk to related to suppliers or your customers. How do you balance that struggle of finding the right people versus, you know, purchasing team knows your suppliers, the sales team knows your customers, and they can be the voice of these external stakeholders? Maybe better for James to answer first.
Start with that. So simply put, you don't need to do stakeholder engagement at all. There is no requirement to do stakeholder engagement. Does everybody do it? Yes. So it'll look a bit funny if you don't do it, but can that be entirely internal? Absolutely. As long as you can justify why you think you're getting the relevant information that you need. What's also important when you're doing a double materiality, it's not just stakeholder engagement that provides you with information about what is material and what isn't material. There's other useful information out there. You know, maybe you've got something that through your procurement process, you know what contract terms people are putting into their contracts. And you know, I know for my organization, when we work with clients, we know how many of them are asking for us, do you have GHG data? And almost that's a better data point than going out and asking them, do you care about climate change? If they're saying it's 20% of their choice around whether they engage with us, it definitely is important for them. So almost actions are more powerful than words sometimes. So I would always remember to do that. In terms of stakeholder engagement, I always try and think of it, again, stakeholder engagement for the purposes of CSRD isn't really what we're trying to do here. Stakeholder engagement is you do it because it's valuable to your business. If I go and talk to someone, I'm pretty sure something that's valuable to a business is to know, well, if I go and talk to all of my customers, and this is what they're saying about these 10 topics, and then I talk to the teams that are responsible for those customers, and what's important about those 10 topics, which of those 10 topics they think are important, it's quite useful to know what the difference is. Same with suppliers and procurement teams, same with leadership and people in your business. And so that's where you've got some real value coming out of a stakeholder engagement exercise beyond just the identification for double materiality assessments. So maybe sometimes think of it that way, as opposed to, is this just a cost to my business going out and try and work out what's important.
Great. All right, let's move on to the next mistake. All right, this one is underestimating the importance of the qualitative, the narrative sections. So this image here, we're pulling from, I believe, a online resource, but the total number of questions here at the very bottom right is 823. So that's a little less than the 1100 number that's always being circulated. And I believe it's because it's leaving out the application requirement, the AR questions. So a little bit of a disclaimer on the total number here, but it doesn't change the overall message that in the first column, in the narrative section, 57% of the questions are actually narrative related to what is your policy, you know, what are some of the actions you have in place, what are the actual risks and opportunities related to each of these topics. So CSRD, I think we talk a lot about the quantitative data points, because those are obviously, you can't make those up. You have to collect them, and it is a difficult part of the process, but we cannot underestimate the qualitative sections. So maybe first to Sophia, what challenges, if any, did you face in documenting some of these ESG policies as you were preparing for the CSRD report?
I think this is a really, really good question, because this is one of the biggest challenges, I think, in setting up a CSRD report, because as the standard requires both like the quantitative and the qualitative data, and it's like somehow I think you have to strike to find a balance, or strike a balance between that they have the data in place telling the story, but so also like the numbers supporting your story somehow, and you have to have both in place. So I think quantitative data is definitely super important because that is the one which makes it comparable, like to previous years. It shows like an evaluation of how the development is in terms of the numbers and the figures, but also the qualitative data is super important, and there you can like explain the data, you can express the progress, you can express like what are your initiatives and what kind of development you want to have in a specific focus area or field of reporting. So I think the combination of both is key here, and yeah. And I think also you can also be very honest with data points, because what we are figuring out also within the DMA process is there is not all data in place. So, but I think this is kind of fine as long as you give like an outlook of how you're going to manage this in the future. So because we are all starting with this, and yeah, it's that not we are like right on top of everything, but we are in the process, and of course we want to like do it the best way we can, but it's totally logical that not everything is set up like super properly, but I think you can also be very honest with that.
Yeah, no, it's totally true. Like, all of these policy questions, they have a little, what do you call it? A question that says, do you not have policies? If so, you just have to explain why you don't have the policies and what are the timeline for you to get those policies in place. So there's no, I guess, real requirement to have those policies in place from the very beginning, but it is important to recognize that you need to understand what are the policies you will have to ultimately adopt for some of these material topics.
Definitely. And from our opinion, just as an experience, I can also say that we found out that we have like some policies in place, and even more than I thought in the beginning. So this is also a finding. So when you start searching within your organization, there are coming up a lot of policies, but it's not done by just setting up a policy. I think this James can underline this. It's like the auditor also wants to make sure that this is like not only written down somewhere, but that it's applied and communicated and things like that.
Yes, the worst thing you can do is say we have this policy.
Yeah.
And put that out publicly, not just from an audit risk, but also from a legal risk, and say, this is our policy, this is what we do, and then someone challenges you, and that's not what you're doing. So you do need to be very careful about that. Don't just because you've written a policy quickly so you can get it into the report, if it's not being applied, don't say you've got a policy. Say that you've recently written a policy and it's in the process of being established into the business. Absolutely important to be clear with what you're saying and what you're doing.
Yeah.
And sort of on that sort of similar vein, and kind of feeding what you just said there, Sophia, I was talking with a person who wrote ESRS G1 relatively recently. And this was just after Omnibus had been announced. So I think she was clearly a little bit frustrated. But she was very, very clear that the way these standards have been written is to get you to explain what you do. It's not a series of tick boxes. And what they want you to do is say, this is what our business is doing around this particular topic, political engagement and lobbying. And it gives you, so effectively, it's almost, I hate to say this, it's almost like guidance about these are the things to think about and the points to try and hit when you're explaining that. But it's not a case of, I've got to provide a specific answer to every single narrative data point in there. You need to tell your story. What are you doing? Why are you doing it? And then almost use the sort of the standards and the qualitative data points as a checkbox afterwards and go, okay, yeah, I've hit that point here and that point here and that point here. And often what we found when we've been writing the disclosures is you'll write sort of 2-3 sentences that explains your process. And then you'll go back to the data points and you go, well, actually, I've kind of mostly covered that one. And then 5 data points later, I've covered those 3 as well. And maybe it's not perfect, but it doesn't necessarily need to be. And I know that's a challenge with the auditors when it comes through to it. We had a lot of challenge with that. They kept asking us and pushing us. But at the end of the day, if you can say, yeah, well, we've been honest about what we're doing and you've checked that that's true, we've sort of hit this data point, but it's not exact and it's never going to be exact because actually every business is different and the standards are written from a theoretical perspective, not from a company, your specific company doing the activity. So don't try and think you need to be able to hit every data point absolutely perfectly. Talk about what you do and then match it up to the data points. you're on mute, Amy, I think.
That's a great point. And I wanted to just showcase that example with ESRS G1 topic. So let's say that you're talking about your business conduct policies. Then the ESRS does lay out the minimum disclosure requirements where you have to talk about the key content of the policy, the scope, the most senior level in the organization that is accountable for the policy. So the ESRS guidelines do specify some of the minimum components of what they expect to see in a policy, but it doesn't mean you have to, rewrite your policy that you already have in place for business conduct to kind of fit this mold. This is more of what they would expect to see in a typical business conduct policy. And we also know that many of these CSRD topics you've already worked on, right? Like it's not like no one has already a business conduct or code of conduct policy in place internally. So one of the features that we find helpful for our customers is for you to be able to add in your last year's sustainability report or your sample supplier code of conduct, employee code of conduct, your whistleblower policy, waste management policy, etc. And when you're answering some of these specific questions, then instead of having to go and find the actual body of text, you can instead have the AI give suggestions being like, hey, in your sample employee code of conduct, you already talk about your code of conduct. So instead of writing it anew, you could just refer to it and have the auditors refer to this as well. So just wanted to share that quickly as well. Great. All right. Moving on to mistake 4, is there anything else you want to add on the narrative side?
No, I just wanted to add that this function in the tool is super cool as we're just experiencing it. So, so we started to write the report in the tool, and it's super helpful because you have like everything in place and the direct link, and then you can check whether it's important or not, but you do not have to look it up or search for it again. So I think it's a super smart and super helpful function.
Okay, so mistake 4, organizational readiness and education. I think we've had some of this already trickle through the answers we've talked about so far, but it is a very interesting topic because CSRD involves more stakeholders than ever before into the ESG practice. We've also know companies that used to only report on like a specific entity, but now they have to report at the global level. So they're having to involve different countries with different data systems, and it's a whole headache on its own as well. So organizational readiness, convincing stakeholders that this is what they need to do. Education stakeholder buy-in is a big topic. So first question to Sophia is, what were some of the steps that you took to kind of spread the word about CSRD in your organization and make sure that people knew what was coming?
Mm-hmm. Yeah, I could definitely tell something to this because when I started like to dive deep into the process, and it's not that long ago that I took over the responsibility for also setting up the report, I recognized that, as I said before, it's kind of just lying on our shoulders. And the first thing I noticed is that, okay, we have to change the system here. We have to set up a so-called task force for that, because it can't be just on the sustainability department from my point of view or from one department, because I think it's important to have like a cross-functional team working on that. So we decided to go like with the finance department, work very closely together with the finance department, with the risk management, and the sustainability department, as well as the compliance, because these are the departments which have like the biggest interface, or the interfaces with the reporting. And I think this works really, really well. So I wished also for a project manager supporting this whole process. And I know other brands or companies having like internal project teams just focusing on the CSRD reporting. So, but we are tracking the process, and we put like the responsibility on more teams and set up this task force. And yeah, because as I said before, it's kind of a mind shift, and what we definitely are doing, and recognize that training is key. So we have to talk a lot. So internal communication in regards to the CSRD reporting is super essential. We have the board and our CFO, of course, on board in this whole project. So I think the alignment there is essential for setting this up. And we go now on to smaller trainings for separate groups, like, for example, the HR department, the IT, the procurement, the logistics. So yeah, because what is not working very properly is to set up something globally. So it's like, okay, everybody is kind of aware of what is the CSRD, but you have to go really deep into the processes of the single departments and explain exactly what you need from them. So I think training is another thing we are setting up now more and more, and talk to the different stakeholders also separately, individually, and try to answer their special concerns or the challenges they are facing.
Yeah, we've had even some of our clients use like their online learning and development platforms where they roll out just like general security training or code of conduct training, and they included a module on CSRD and had all of their employees participate. So that was a case of very global education. But James, yeah, I'm curious to hear your thoughts on how, you know, you can get your organization ready and who you should be involving within the organization.
And I think what's key, I'll kind of go back to my point at the beginning, you've got to work with your business, not against it. It's not a separate exercise. So right from the beginning, you should be working with the teams you think are likely to be important. I mean, if you're a people-based business, the HR team are going to be important. You're going to be talking about that stuff. What you don't want to be doing is doing an assessment, your double materiality assessment, and sort of coming up with all these are the policies we need to have. Tell me lots of information. This is the story you need to tell. Actually, you want to be working with your HR department that says, what is the story that you're telling? What is it that your department's doing, and why is it doing it? You know, what is it doing? Your policies, actions, targets, metrics. Why are you doing it? That's your impacts, risks, and opportunities, your double materiality assessment. And so working with that team is much more effective than trying to tell them what to do, because you'll just get they'll come back to you and say, go away. You know, I know HR far better than you do. Who are you to tell me what I should be doing and how I should be doing my job? So I think that's really, really critical. Right from the beginning, you should be engaging with those teams. And it's also important, particularly for larger organizations, that you get the right level of seniority that you're engaging with. I think one of the challenges we've often found is you often find yourself engaging with sort of mid to lower level people, trying to make decisions, trying to come up with what is quite comprehensive information about strategy, objectives, what the business is doing and why it's being done, only for that then to go up to the next level of review, and that person doing the level of review says, actually, no, that's not how I think about it. It needs to completely change. And that's, you know, while the sort of the bedrocks will be the same, yes, those are the actions we're doing. That is the policy we have. The story and how it fits together is very different. And then, of course, you know, even larger organizations, then it goes up to the executive or it goes up to another layer of review and they say something completely different. So it's really important that you've got that kind of within that department, they're thinking about this, not just sort of the different stages, but what's the end goal they're trying to get to. And they're taking ownership of kind of what they're ultimately trying to produce so that they're lined up. And that makes your job a lot easier as the person ultimately responsible for bringing this all together.
Great. And we were talking just earlier that the second question here on educating non-sustainability departments and the importance of ESG reporting is kind of its own workshop on its own. But Sophia, when you're talking with leadership or when you're talking with other teams, what kind of language works the best? Like, do you appeal to, you know, this is a compliance requirement, so we need to do it? Or is it, you know, our customers care about this, therefore we need to be transparent, or, you know, our investors, or, you know, what's the positioning that usually works the best in talking to other team members?
Yeah, I think it's you have to explain them so what matters for them. So like using their language and make it fit to their role and responsibilities, because what does not really work if you are always like talking about the big compliance thing and the risk in not doing it and putting that much pressure on the topic, because I said that before, then it has more the effect that people are like rejecting, and they're saying, okay, oh, please give the responsibility to somebody else, because do not want to make it wrong. So I think you have to really explain them how it affects their specific role and how it could like value their jobs and daily tasks doing this, because as we said, it's not only a burden, it has like a huge chance in resetting the strategy and review also what you're doing day in and day out, and making it also better. So I think the language is an easy language, and you have to simplify the whole thing a bit, because otherwise they are not really getting the point, and it's not adjusted to them. So I always try to explain what's the matter for them, and this kind of works best. And this is why I say for us, it's not so good to set up things globally. Of course, we have like a town hall session where we are informing about the general progress in this whole process. But when it comes to more detailed things, I think we have to adjust it to the specific language and explain it to the specific roles and jobs.
I completely agree with what Sophia says there. I think that it's absolutely critical. One other thing that just you can almost tell from this slide that you've got there is you're actually building these connections between different teams within an organization. And actually those teams don't necessarily speak the same language. Mm-hmm. So you need to think about, sometimes you as sort of the person responsible for this, you end up as the kind of the translator and the mediator. And, you know, let's say a good example I had was controls. So a company was looking at putting some controls in place for various parts of their business that had never dealt with controls. And actually there was a whole kind of exercise that had to go on about how do you almost moderate the controls team to stop them talking in quite such control-based languages and translate that into something that the impact team were sort of really understood and really focused on. And that's quite an interesting element here to how the education, it's not just education of CSRD and why to do it, it's the education of your different teams and what they do and how they fit together and building those bridges.
Yeah. No, for sure. We hear this all the time where the internal controls teams or internal audit teams have been only used to auditing financial data. And so then they have tried to apply that same angle to greenhouse gases or to HR data, only to realize that there's a lot of big gaps. And you have to remind them, like, look, this is like, think of financial data decades ago. And we're trying to establish that process. And I think that level of, I think we always see it with our clients in terms of having to kind of build that rapport and like education between the controls teams and the finance team with the ESG teams too, so that everyone understands where everyone is at. Great. The final mistake is around tools. So relatively few companies are using tools. So Sophia, as you mentioned, you were using scorecards and Excel, and that served your purpose for a long time. But then, you know, as more and more sites are having to report data, there's more and more KPIs. It became a pretty unwieldy process. And I think most companies, 74% of companies today are using spreadsheets for their ESG data collection. There's carbon calculation tools are a big part of it, as well as ERP systems. So when it comes to HR data or, you know, business travel, all of that data is coming from ERP systems. I'd say first question for James is, what do you think is the biggest disadvantage of relying on traditional tools like Excel for ESG reporting?
So I say they have their place, but there's definitely limitations to them. Version control is really important. You can have a lot of stakeholders coming into this. So, you know, being able to manage different versions and, you know, different people making changes at the same time. Yes, you could use something like Google Sheets, but even then it doesn't really work the same way as a tool often does. Other one is scalability. If you've got lots of people, you want to try and bring in lots of data, you want to bring in lots of information. An Excel spreadsheet doesn't, or a Word document doesn't necessarily do that very well. And probably the biggest one is control over the information. You know, how can you evidence sign-offs? Can you have an element of control about what somebody's putting in? Is it checked by somebody? Yes. And then it goes into the reporting. You've got an element of control over the information flows. And probably the final one is just efficiency. Once you've got to a certain, but once you know where all your information is, It's about sort of bedding it down into a tool, which takes away some of that project management, takes away some of that admin stuff, and allows it to all sort of flow through. So yeah, it's an element of, I completely understand why Sophia and many of the people on this list have been using what is familiar to them. And probably that is the place to start in many cases, because you have to understand your information first before you can start putting it into a tool, because ultimately it's going to be an input into a tool. And how long that takes, that's kind of depends on your organization. But really people should and will be progressing towards tools over time.
Yeah, the crawl, walk, run mentality, James, totally makes sense. You can't just put in a tool when you don't even know what the data looks like and where from the organization you're going to be getting the data. Sophia, anything to add in terms of using Excel for reporting? I totally agree with you that it's usually the quickest solution to get stood up when you need to get this process going.
Yeah, I would add like maybe the manual workload, because working all with these Excel is such a huge manual workload as well. And you have also no like kind of user rights management, you know, like in Excel, everybody can enter data. And I don't know, but we experience a lot of data entries which are wrong or incorrect or not sufficient, and they're not corrected in a second phase, or not reviewed. And then it's like, I don't know, if in terms of energy data from our retail stores, and then somebody just like moves the dot point from one digit to another, and this like definitely affects the total calculation in the end. And this is a high risk, like the no rights, and everybody is able to edit such files. And I think this is also something which is better when you're having a tool in place and having like more of a rights management.
Absolutely.
Yeah.
And James, language models, AI is becoming a huge thing. How do you see clients leverage it for ESG reporting purposes today?
Interestingly, not very much at the moment. And I think it kind of comes down to people, always a little bit reticent on using AI to start with, particularly in corporations where actually if this is going out publicly, you're not 100% sure whether you can rely on that information. Where have I seen some companies do it? Many of them blanket say no, is in starting to try and draft some of the reporting or bits and pieces of the information. You can put in, right, here's the answer to all of our questions. Maybe we can start using that to produce a kind of an output. It's not great. It's getting there. And clearly you can't rely upon it. It's a tool in your workshop that you can use. I think the most interesting one is the one that Tracera does and that Sophia mentioned previously. That's where we've seen, I was most excited when I actually sort of decided to start talking with you guys and working with you a bit, is because you have this capability to take existing information that you already report and bring it into your software to give somebody a head start in what they're going to start writing about, what they're going to start reporting. And then you've got the human layer that then goes on top of that. So I think that's the way, to me, it has to work. Don't do it the other way around. Don't go, we're going to write stuff and then get AI to try and do something with it.
Yeah, makes sense. A question from the audience is actually related to this third point here. And maybe we'll wrap with this one in terms of cross-functional collaboration and how to achieve the departments across the board to get buy-in. And one of the things is that, the ESG responsibilities are not in procurement team's job description, or it's not in the HR team's job description. And it can lead to feelings of like not being recognized or having to take on additional workload that's not part of their daily mandate. Well, how would you recommend approaching this so that they feel like ESG is part of their daily responsibilities and they get the recognition that they deserve?
That's a tough question to answer. How do you manage? It is difficult because you are changing the way that companies work. You are building these more matrix structures within an organization, which is really, really powerful and really, really useful. I think what you've got to think about is people are people. And actually, you put somebody on a call together and you have them engaging on a weekly basis or a bi-weekly basis to talk through the challenges and what they're thinking about. It becomes more of a collaboration. Right people in the room is much more effective than it being a kind of game of tennis via email. So I think in person, if possible, virtual otherwise, that kind of personal interaction is the way to make sure you don't breed that bad feeling. And really, it is a collaborative effort at all levels of the organization, right? You want your executive committee heads of HR, the heads of procurement, the heads of operations, the heads of finance, you want them to be working together on CSRD. It needs to come from the top. They need to be thinking about it in that way. You want the leaders of the different departments to be working together and saying, well, this is what I'm seeing, this is what you're seeing. And you want the more junior levels. So you do need to absolutely make sure you've got those personal interactions going on. And that absolutely is a challenge, and probably one of the most important things that you can be doing as part of the education exercise is really making sure your business is talking to itself.
Definitely. And I would like to add that CSRD compliance is like a major shift in the organization or within an organization. And this is not to be underestimated. So it's a shift in mindset, it's a shift in the data, and it's also maybe a shift in job roles. So, but this is something also very, very new, and well, we need to adjust to it.
Yeah. No,
Overall,
awesome.
get it into budgets.
Yeah.
Recognize that there is going to be extra work here. And when you're talking to, say a compliance team or a sustainability team, and they're responsible, say, for climate change, their reporting workload is going up. Try and make
Yeah.
sure that actually they've got the capacity to do that, and they've got someone who's assigned responsibility for doing that, and it's in the budgets. So if you need to go out and get resource, whether consultant, third party, or whether it's, hire somebody into the business, whether it's get a tool to make that process more efficient, make sure it's in the budgets. That's one of the things why you should be starting early on this.
Yeah. And maybe just one final note, maybe Sophia, what are your thoughts on AI on ESG reporting?
So I'm kind of a big fan of AI, and we were like, if we are tracking like different software providers supporting us in these things, we definitely found the AI support the big advantage of Tracera. And I think this is so important because it's like it automates the whole process, and getting all the suggestions and having like the structure in place is super helpful. Because if I remember like setting up the last report and like doing it all manually, looking at the standard, setting up everything in Word, so you now have kind of the whole structure in place, which makes it much more easy and handleable setting up this report. And you can walk by one through the standards, through the sub topics, see whether they're material or not. Like you have the link directly to the results from the DMA, and you could like install that all in place. And I think this is super helpful and saves a lot of resources for us. Of course, we do it now like the second time, and this most probably is also easier than doing it for the first time. But having also the link to the requirements and the suggestions for maybe like most common answers in place is also super helpful. And yeah, I think this automates the whole process a lot. And of course, another big advantage is like that the whole workflow or the process of working together is, yeah, it's much more collaborative. So, and I can remind the people via the tools, so they know all where to put it. And I'm not that, yeah, I'm more flexible in that.
Yeah, awesome. Well, I think that's gonna be the wrap then for this workshop session. Thank you everybody for joining. And if you have any further questions, Anastasia has put in the chat this community that we're building out. It's just for sustainability leaders to join and share insights. You can ask questions and, like who's the best auditor to use for DMA, stuff like that. You can join and ask anything you would like. So it's free to join. So please do so if you have the time. And thank you for your time.
Thanks very much, Amy.
Thank you.
Thank you, Sophia. Thank you, James.